Hey investors, today I am going to be talking to you about HMMC. Hey investors, today I am going to talk to you about HMMC, the ETF from Horizon, and of course it's on the Toronto Stock Exchange. So of course if you're looking at this stock, the first thing that really jumps out at you, other than the fact that it's a weed stock, it's a marijuana stock, is the fact that basically you're looking at an ETF that has what's estimated to be a 7% dividend. Actually, in fact, the annualized yield that they expect is around 7.3%. However, the 12-month trailing yield is 13.8, which is massive. And you're probably wondering, how can this be possible? Marijuana companies do not pay a dividend. So how can this ETF pay a dividend? And as we can see from the top company holdings that this ETF has, there is no companies that pay a dividend. So how in the world can they afford to pay a 13% or even a 7% dividend? How is this possible? And that's actually a very valid question. How is this even possible? Well, actually, it is possible, and this is how. So basically what they do with the company holdings that they have is they loan those company holdings, the stocks, out to investors who want to sell them short. And when you sell a company short, that means that you're selling a company stock that you do not currently own, so that you can hopefully buy it back at a lower price so that you can make that difference. And of course, if you're selling a company stock that you don't own, of course, you can't just say, oh yeah, look, I've got this imaginary piece of stock I need to go and sell. No, well, that stock has to come from somewhere, and that stock comes from, at least when it comes to these companies, comes from this ETF. They loan the company stocks out knowing that they're going to be getting that company stock back eventually. And then they can take that loan money that they get from there and pay it out as a dividend. So now they're not just making money whether or not the stock prices of the marijuana companies go up or down. They're now making money on other people who are trying to sell those companies short. And that's going to be a massive benefit to an ETF like this, because as we know, the marijuana industry is kind of hit and miss. There's some really good companies like CGC as well as Aurora. I currently own a lot of Aurora stock, but there is a lot of risk involved because, of course, at any given time, there could be a government change. We could get the Conservatives in Canada, for example, and they may say, well, we don't want marijuana stocks or even marijuana to be legal anymore. And then they, of course, close down that industry. Now, I don't think that's going to happen. People like me take CBD oil for my knees because I've got severe arthritis in my knees from past basketball injuries, and of course surgeries. I've had multiple major knee surgeries, and of course I've got arthritis, what a regular 60-something or 70-something-year-old person has, and I'm 30. So from there, the whole CBD oil thing is great for people like me, or even older people, and of course there's younger people and even older people who like to smoke this stuff and of course have their fun. So there's even more and more states down in the USA that are now legalizing marijuana for recreational purposes as well as for medical purposes. And when it comes down to it, there's a huge upside in the marijuana stock industry. However, at the same time, there is still massive risk. Anytime that there's a massive potential, there's also massive risk. You have to keep that in mind. Now, the great thing with this is it does kind of protect your investment in a way, because even though the stock may be going down, when the stocks are going down, people are selling the companies short, which means that this ETF actually makes money that way. So as we can see from the 2020 distributions, they are actually paying a pretty good dividend. Of course, the dividend seems to be going down throughout this year, and I can assume why, and that's because, of course, the marijuana industry has been recently going down up until the last couple of weeks. It's kind of recovered just a bit, but we're also seeing the whole COVID pandemic thing that's hitting us. So, of course, that's going to be affecting how much they pay out, and of course, how many people are actually selling short. And as we can see, they do have a long history of paying a dividend every quarter, and we can see that right here on this chart throughout the beginning all the way back until 2017 when this stock originally started. They were paying a twice a year, or they were expecting to pay a twice a year dividend. They eventually turned it into a quarterly dividend, and now it's still going as a quarterly dividend. And we can actually see from here, when we scrub along, that these distributions tend to go up, they tend to go down. It's not really guaranteed how much you're going to be getting. So if you're looking for a stable income from an ETF like this, don't expect it. Expect there to be a dividend. Think of it as a bonus, in my opinion. Anytime there's an unstable dividend, it changes all the time. You can really see the fluctuations in each of the dividends, which is what we do see. But that is expected because, of course, the ability to loan your stocks and how many people will be selling short really comes down to the market confidence in the marijuana stocks. If there's more confidence, then the dividend for this stock goes down, but if there's less confidence, then the dividend, I would assume, would go up. Also, when the stock starts hitting the tops, which means that it's really going high, it's breaking new ground, it's really hitting new highs as an industry, there's going to be more and more people selling short. And why that happens is the same idea as when we look at the Dow Jones or the S&P 500. Once it hits a new all-time high, the market generally regresses a bit. That's just how it is. Higher highs, lower lows. And of course, that's just how it's been forever. Every time you look at the market, there's always higher highs and lower lows. Whether or not you're in a recession like we are right now or not, there's always going to be higher highs and lower lows. So from there, if in this industry starts catching fire, especially with more and more states coming on board, it's going to start hitting more and higher highs, which is good for your underlying equity, but at the same time is good for your dividend, because that dividend is going to be going up because there's more people selling short because they expect the market to correct. And we can really see this here, where from the beginning all the way till now, you really haven't done very well. And you have, but you haven't at the same time. So in 2017, if you joined in, you were all the way up by a ton, or well over 25,000, which is 2.5 times more than what you put in. And all it took was roughly a year and a half to a year and a quarter, somewhere around there. That is a very short amount of time to go 2.5x what you invested. But as we can see, the stock has gone down because, of course, the whole industry has regressed as well. Will it stay here? I don't know. It seems to have plateaued just a bit. And recently, I've seen stocks like Aurora take a couple of jumps. So it is kind of interesting to see what will happen into the future. There's more and more states and countries that are legalizing marijuana, which is why it's an interesting stock to me, an ETF to me, because of course, at this point, whatever you put into this ETF, expect it to go to zero, in my opinion, but at the same time, expect it as well to go up massively in the future. There's going to be more and more people using marijuana for medical and recreational purposes, especially when it has come out onto the market legally. If we look back at the alcohol industry and how much it grew over the last 50, 75, 100 years, however, I didn't look into the prohibition, how long ago that was. I'm a young kid, but I'm also not talking about the alcohol industry. I'm talking about the marijuana industry in this video. But if we look at how much more people have started drinking since the beginning of prohibition, or the end of prohibition, all the way until now, and see those alcohol companies grow, if you're young like me in your 30s, and you can kind of look at this and say, well, if I don't know how much money you have, but if I was to put $1,000 into it today and look at my money 30 years down the road when I'm looking at retiring, or 35 or 40 years down the road, maybe that $1,000 will be worth maybe $10,000, but during that time I'm getting a dividend, which easily will pay itself back within 10 to 15 years. If you're looking for the long-term hold, this is definitely something that's very interesting for most people who are younger. I'm not too sure about people who are older. I hope that you have enjoyed today's video. If you have, hit that like button and subscribe, and I'll see you guys again next time.